All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, January 7th, 2022. So markets opening flat, little bit of a pop here, and then rolled over in the morning session, made a new low, new local low here, and ended up being kind of a bear trap here. And I tweeted this out to everybody, and every one of the members at Carnivore Trades here on Patreon and whatnot that I talked to, everybody was like, yeah, this is obviously a bear trap. Some of us were selling calls on VXX. Some of us picked up some triple Q longs. But I mean, it was kind of obvious here. And really the reason for that is you had the lower low on the spider. You had the lower low on the triple Q. Well, you didn't make a higher high on the VIX. And a lot of the time that's a red flag there. It looks to me like there's some kind of distribution going on here on the, specifically tech, but in the major indices. And they were just kind of looking to try and induce a short squeeze here. Didn't quite exactly happen. So we're kind of printing another doji here on the spiders daily. Now, if the market does hold on here and bid up into the close, or maybe it holds on Monday, Tuesday, we get a little bit of a relief rally. The resistance is going to be 472, so that's where we broke down from. So that will be resistance. We also have resistance around 474, somewhere in that range. But in the near term, if it can't do that and it continues printing dojis and going sideways, it's telling you it's setting up to move lower here. So just be on guard for that. Tech was continued to be weak today, led lower by the semiconductors, down 2.78% currently. Market's closing in about 20 minutes. But semis not showing a sign of strength, barring a massive bid. They will lose their 50 moving average on a daily closing basis. And the IGV, again, being a laggard here. And again, I talked about this for weeks, but this bearish pattern here, lower highs, bearish chop. Take a look at the weekly here on IGV. All inside bar consolidation and a flush down. Now it is into, it's starting to get into some good support area. There's a lot of chop in here. So it wouldn't surprise me if we had a little bit of a relief rally there on cloud software. But again, tech's the big story here, as is yields. So yields are on breakout. It is confirmed now. If we look on the weekly, look at that power thrust on the weekly time frame. I talked about that bear trap on TLT a few weeks ago. That has played out. Now we're into the 200 moving average, but it's a bit of a minor moving average because we came up here and we consolidated for like 3 months. And so now we're getting a thrust into that. So I don't expect this to be too major support. You do have kind of the double top that you pierced. You got all this chop here, but look what you did. And I said this since April of this year. All of this move here was backing and filling. And all it was is backing and filling to essentially accumulate the supply that was sold here. So this is your distribution, and then this is your accumulation, and this is what's happening. So that's why yields are able to push higher now. By the way, you just triggered an inverse head and shoulder pattern on the TNX. So yields are pushing higher, and that is going to put pressure on tech. I feel like I'm a broken record, but that's what's happening, and that's the way I've been positioned here. Let's take a look at the 30-year. So 30-year breaking through this local trend line here. If we look on the daily, you see we have this little short-term trend line, and then this bigger one that is on breakout above the 200 moving average. Now it is in a little bit of resistance here, so might need to do a little bit of chop, a little bit of backing and filling. But point is, yields are on breakout, and by the way, the yield curve is flattening right now. Notice how the 30-year is underperforming the 10-year just a little bit. So this can be okay for the near term, but if this continues, it is going to be a major problem for the market. By the way, we talked about the VIX making a lower high. It is making a lower high, but it is now in contango. The VIX is now pricing in higher volatility for future contracts. So that is something to keep in mind and keep on your radar as well. But as far as the yield curve goes, let's look at financials. XLF putting a new high, so financials are holding up okay for now. And again, but if that yield curve continues to flatten, it's going to cause problems, and even financials will not be able to withstand that. It's kind of like a Goldilocks scenario. Not too hot, not too cold. If yields are moving up, it's okay, but if they breach a certain threshold, then it's not going to be good for really everything, including financials. XBD broker dealers here underperforming the XLF a little bit, but still having a nice day. Does need to get through this red bar high if it wants to go up and challenge double top. But again, a decent move there for broker dealers. JPM was strong all day long, up 1%. Always look at JPM as a leading financial stock. Goldman recouping some of the losses from yesterday. But Goldman's been a little bit weaker over the last week, is up 0.5% now. Bank of America up 2.3. Wells Fargo up 2.2. Wells Fargo has been a strong name lately, really pushing higher here. And actually, if you look on the bigger time frame, it's getting above this red bar pivot here. I don't know how much higher it gets. It's got a lot of resistance up here as well, but you could have made a case that this was this all was just a bear market rally, but now you're getting above this pivot here. So Wells Fargo is showing strength, but it is into some resistance here. Just wanted to point that out there, but Wells Fargo's holding up very well. Let's take a look at energy. So energy was another strong sector today, and this is why the market wasn't down as much as it was, or down more than it was. It's actually kind of flattish right now, tech getting hit the most. But energy and financials are helping keep the market up. So XLE continuing to push higher. You do have a potential weekly breakout over this trend line. Not a monthly yet. This is a monthly trend line, but we did get above that on the weekly time frame. So we'll give XLE the benefit of the doubt. If it gets higher, it wants to push higher, it's going to have a ton of resistance up here at about 65. This necktie of the moving averages here, 100 and 200 month. Plus all this chop up here, that's going to be a lot of resistance. But XLE, a strong name right now. Let's take a look at the XOP on the daily. Again, a little bit weaker. Kind of looks like the broker dealers there on the XOP and the OIH. There we go, OIH making a new high. So OIH, hey, go figure. It's actually outperforming a little bit. It was a laggard for a while, and now it's starting to pop up a little bit. It's going to have some resistance around here, 220. That's probably your max area for the OIH in the near term. Let's take a look at the Russell 2000. So Russell down 1% today. It had a nice recovery yesterday, was able to finish higher. There we go. Russell 2000 was able to finish higher yesterday, put in a doji on the candle, daily candle. Now, if it comes back up here, we talked about this a little bit yesterday. If this starts to rally back up and you get above this red bar high and this trend line ultimately, you could trigger an inverse head and shoulder. But again, let's not entertain that just yet. It's not triggered. It's got a long way to go. It could just as easily go sideways and build a bear flag and push lower. But just, interesting little development there. If yields continue higher and the market doesn't freak out, financials can move higher and energy can move higher, and perhaps the Russell does that as well. So just something to at least consider here. Not necessarily expecting that to happen, but something to at least have on your radar. Dow Jones up 0.25% today. So Dow, really the winner of the major indices. And I've said over the last month or so that this has kind of been what you should be expecting. The Dow is going to be the strongest index. It is 30 blue chip stocks that are price cap weighted. Therefore, it is going to hold up better in a risk-off scenario, risk-off environment, a high-yield environment. So not really surprising to see that there. But Dow holding all four of its moving averages for now. Unlike the NASDAQ via the triple Qs here, which is now below its 100-day moving average. And I want to show you on the composite. One second. NASDAQ composite, it broke a major trend line yesterday, and that looks to be confirming that today. So NASDAQ composite is going to have some support around 14.5, but if you get through that, it's right down to 14,175 or 14,175. So that is going to be your area there on the NASDAQ composite if it continues lower, which I believe it will. But NASDAQ obviously the weakest. Let's move on here. Transports. A little bit of a mixed bag. So transports are hanging in there, above every moving average except for the 50 right now. But it is a mixed bag. So we had the jets green today. We had some rails, kind of a mixed bag. Union Pacific, higher, CSX, lower, Norfolk Southern, green today. So UPS and FedEx had decent days, but a little bit of a mixed bag here from the transports. Again, transports are more in line with low PE stocks, Dow stocks, stuff like that. So they're going to outperform in a more risk-off environment. Dollar index pulling back today, but again, nothing wrong with this weekly pattern. Still love it. This will break out eventually, maybe as soon as next week, but a little bit of a pullback pattern there on the dollar. Wouldn't make too much out of it. And the metals really just kind of not doing a whole lot today. I said gold would have support right around here. It's bouncing off of that, but not much more to talk about than that. Silver, same kind of deal, and platinum and palladium, same thing here. Platinum is still kind of holding this bullish pattern though for now. So again, you guys know the 1025 area would be upside for that. if it were to play out. And palladium, again, just a sloppy mess, nothing really to do with this. Copper, on the other hand, up 1.18%. And again, holding this green bar low, I said yesterday, it's got to hold this low at 434.5. It has, again, so it could still advance. But again, obviously resistance is at 451 there. And if it gets through that, you got up to 464. Bitcoin, on the other hand, so we talked about that head and shoulders pattern. I'll pull it up in 1 second here. All right, yeah, so Bitcoin triggered the head and shoulders, was not able to get above that neckline. If it does get above the neckline, it can negate the pattern. It is finding short-term support here at 42, 41,000. But, you know, if we continue lower, which I expect it to, you're probably going to get down to about 32K on Bitcoin. By the way, the COT report on Bitcoin last week, I can't remember if I mentioned this or not, but the commercials flipped net short for the first time in a while. So those guys are always early, and the retail non-reportables were still net long. So smart money is getting short Bitcoin, and the retail is still long. So I don't need to explain what that means, but we'll see this afternoon when we get the new COT out if there's any new data to go over, which I will go over in the weekend video as always. Anyways, let's wrap up here. Market closing in about 20 minutes here, actually about 15 minutes. Looks like we're going to go sideways, so not a really whole lot doing here. We will print on Doji on the daily time frame. So again, this is looking more like a dead cat bounce than anything, but you know, we'll see what happens next week. We might see a little bit of skittishness into the close as investors might be worried about a gap up in yields on Monday. So that's always a possibility. But in any case, you guys know where the resistance is. It's 472 if we get up there, and then 474. If we continue lower, then it's probably down to about 458. Maybe you get down to this 100 moving average and fill this gap here on the spiders daily. Outside of that, we'll just continue to monitor. You guys know I will keep you appraised of any new developments as soon as I see them. Come join me on Carnivore Trades. We're crushing it right now. We are 6 for 6 year to date, up over 1.3% for the year already. So we're crushing it out there, knocking it out of the park. You can come join me on Patreon as well. Anyways, guys, take care. I'll hopefully see you in the weekend video tomorrow, and you guys have a great rest of your day.